Welcome back to the InvestTalk Sector Spotlight. I'm Justin Klein.
I'm Luke Guerrero.
And today we're going to talk about the technology sector. And this is a sector that a lot of people are interested in. It's probably the most exciting for most people to talk about. I feel like it's always hot in some way. There's always parts of the technology sector that are hot, except for last year. Most of the technology sector.
Yeah, and if you think about it, the line of business they're in, nobody ever goes, let me tell you about this utility company that's going to change everything.
Yeah, exactly. But, there are three kind of main broad subsectors of technology. There's hardware and there's software. And then there is semiconductors, which is kind of a corollary to, or an offshoot, I guess you could say, of the hardware sector. But the most interesting for most people are hardware and software. And there's kind of an interplay there between the two. Software drives hardware. And like you've said before, hardware drives software as well.
Yeah, it's essentially a cycle, right? You have hardware being created, and then essentially you create software that improves and improves upon the capabilities of that hardware until the hardware can't handle it anymore. Mm-hmm. And then you improve the hardware, and then you make it to the point where the software can't handle that anymore. And it's step by step process.
Mm-hmm. Yeah. And right now AI is in the news. Everyone's talking about it. Obviously.
What's AI?
Artificial intelligence.
Oh, wow.
Yeah. And I think it's a little bit overused, right? What exactly is artificial intelligence and what qualifies as it versus, just a fancy algorithm. But that is a trend that I don't think is changing, right? It's not going anywhere. It's going to continue to evolve. But who are the winners are a big question. Obviously right now it's the NVIDIAs of the world on the hardware side. But on the software side, there are a lot of companies chasing after this, and software is this very competitive industry. It tends to be less cyclical than hardware, right? Because people need to buy the actual physical computers in order to grow what they're trying to accomplish. But software tends to be stickier, right? You have your SaaS companies, and pretty much everybody is a subscriber to SaaS, right? If you're a Netflix subscriber, that's pretty much SaaS, right? Software as a service. And so that's kind of been taken over the world, kind of replaced your install base where you buy that software once. And that's definitely changed the dynamics of the software industry, which makes it stickier in some ways. But I think one question I have in the software space and the SaaS space is, what happens in a down economy? Will there really be people that get rid of certain pieces of software? Do you think that it will have the cyclicality that software typically had, in the early aughts?
Yeah, I think it could, right? But I think there's different dimensions to it. The Netflixes, for example, where I personally was using my brother's until they kicked me off of it. And
was this recent?
This was recent. A couple days ago, they sent an email and was like, you can't use this anymore. So not using Netflix anymore. I had a discussion with my girlfriend if we should get it. And you realize those types of things, maybe it's not worth it, right? It's just the same 20 shows over and over again with different backgrounds. But there's a subsector of software, right? Which is business software, which in the aughts really wasn't as well integrated into the process of helping an industry get ahead as it is today.
Yeah.
And now as you've had the advent of artificial intelligence, AI, which is the buzzword everybody likes to talk about, I think it's going to become more and more ingrained, right? I think a lot of people don't realize that artificial intelligence as it is today, your chat GPTs, right, are run off of neural networks, which have been around for a long time. I don't know if you knew this, but the same technology that created chat GPT is what powers Siri and powers the Google Assistant and pretty much every aspect that requires learning to your voice and learning about human responses, but in a wider, larger scale. And so what they've done is they've expanded it and essentially connected neural networks to improve the amount of information and the speed of information intake. But that, I think, is only going to lower the cyclicality of the software industry as it becomes more ingrained in every other industry.
Yeah, they say software is eating the world, right?
Exactly.
And it kind of has. And I definitely think that the consumer side of SaaS will probably be a little more cyclical than the business side. We use, I don't know how many dozens, and I say dozens. I would say we have about a dozen SaaS softwares that we subscribe to as a business. I don't really think I might switch. I might go from one to another, but I'm probably not going to spend less than I spend today. So I think because we're so reliant on those pieces of software. So I still think it'll be competitive, but probably won't be as cyclical. And I think that's why a lot of them trade at high multiples. A lot of the software stocks. Should they trade at higher multiples than the market? I would say probably their business is going to be less sticky. Their margins tend to be fairly high. But often in the technology sector, people can get ahead of themselves, right? And that happened a lot, in 2021 when everyone looked at COVID and the shutdowns and everybody extrapolated that growth.
Citrix.
Yeah.
Zoom,
exactly.
Yeah.
The valuations of Zoom is probably down 90+% from its high,
Yeah.
and Zoom is still operating. It's still a solid company, but it was trading at absurd valuations. And that's what happens in the tech sector a lot, is just because people are so interested in it, because there's hot money going in and out of different fads, it's very easy to get caught up in those fads and get invested at egregiously high prices like Nvidia today.
Yeah, which is why you have to be extra careful, right? And I say this a lot, is that Amazon ruined everything, because Amazon was a company that for a very long time made zero money at all whatsoever. And the valuation was insane, off of making no money at all whatsoever. And Uber's another one of them, right? Like, these are companies that people invested in for the future. For Uber, the future never came. Uber still does not make money. Like, it's still not a good company. But you have to be careful, because just because there's one of these unicorn stories that starts prancing around successfully doesn't necessarily mean that the next one is going to do that as well. And so investors get trapped in this area where they're investing in companies that have a great value proposition, but it just stays a proposition.
Yeah. And I think that happens a lot. I like that unicorn analogy, because that unicorn is basically a company that's valued at over $1 billion, right? And there's over the past, I would say 5-10 years,
private startup companies.
Yeah, private startup companies, and a lot of people compare many of them to the giant ones, right? The Googles and Amazons of the world, like you spoke about. But I think about the analogy of my girlfriend. She is a doctor, and she tells me the story about how she, in the hospital, she would see all these crazy cases of diagnoses that are very uncommon. In the real world, you see often similar symptoms, but a lot of times those doctors who work in those hospitals, they conflate those symptoms with these very rare occurrences that they've actually seen. But what she said, one of her attendees told her, was most people, they're horses. They're not unicorns.
Occam's razor.
There you go.
Horses, not zebras.
Exactly.
If you hear hooves prancing, it's a horse.
Yeah.
It's not a zebra.
It's probably not a zebra, right? And that happens a lot in the tech space, is you see a company that's having a modicum of success, and they conflate that success with another similar company. And sometimes one out of probably 100 that actually turns into something gigantic, but more often than not, it's more hype than substance.
Yeah, and another lesson is business is hard. Business is very hard,
and it's competitive.
You have a company that had a great business proposition, WeWork, that essentially just lit absurd sums of money on fire until it couldn't get it anymore.
Yeah, I mean, ideas are great, but it's about execution. And WeWork, there was something behind that. I think, especially in the work from home environment, I think there's definitely some potential there. But it's really about smart allocation of capital, and that's what really business is about, is that smart allocation of capital. And unfortunately, the business community, or in the technology community, they're more chasing that next innovation than doing things that are good for shareholders and good for investors, right?
Yeah. So what do you think about tech going forward then, as interest rates are going up, right? A lot of these businesses that are trying to innovate, that's expensive, right?
Yeah.
It's, they have great margins eventually, the ones that do well, but it's similar to the prescription drug industry, right? The first pill cost $500 million. And then after that, it's pretty cheap and the margins get better. So, for the past 10, 15 years, money's been free. Money has been cheap. So people can throw money at what they perceive as unicorns. What do you think about the availability of not just, these big guys that are raising capital? They can always do it. But what do you think, especially in the wake of the regional banking crisis, of the ability of the guys that haven't done anything before innovating?
Yeah. I mean, I think of what's happening with the regional banks and their problem with long duration assets, right? That's what they were doing. They were buying these long-term treasuries, and interest rates went up, and suddenly they were underwater. And that has happened recently in the tech space, where a lot of these companies are simply long duration assets, right? Because what they are priced at is not just what their earnings are going to be today, which for many of them is zero or negative, but what it's going to be 10, 15 years down the line. And that's how the market's kind of pricing them. And so higher cost of capital way on. And you saw that last year in 2022, where the price of many of those names went down big time. So I think that's more of a longer term trend. But what the type of companies I like in the tech space are what I call picks and shovels. And that can take different forms. So going back to the SaaS software, I think the picks and shovels to do business, that's the software that's needed, I think those tend to be pretty good businesses. Whereas, and in the semiconductor space, there's a lot of hot companies. You talk about NVIDIA, but semiconductors, they're very cyclical. If you look at the history of semiconductors, there's overcapacity, and then there's undercapacity. In 2021, you had undercapacity because so many people bought physical goods.
Mm-hmm.
And that typically leads to what? Mass investment in production capacity. There's overcapacity, and suddenly margins shrink. And same thing with inventory capacity, right? You make too many of them and you have too much sitting on your balance sheet and you have to sell them at cheap prices, oftentimes losing money. And so that cyclicality of just the hardware sector, whether that's semiconductors or just hardware, that can be an issue. But I like the companies that are helping design the semiconductors, design the end product,
and test, design and test.
Exactly. And all of those type of companies, they tend to have steadier businesses because all of these bigger hardware companies, they're trying to make that next iteration, that next good product that their customers are demanding. Otherwise, they're going to lose market share. And so they tend to employ a lot of companies that give them the picks and shovels to build what they need. So those are the type of companies I think within the tech space that have the best long-term prospects for investment. Obviously, you're going to hit the grand slam every once in a while with those companies attached to artificial intelligence or maybe crypto or something that's maybe sexy, but the vast majority of them you're probably going to burn a lot of capital.
Yeah, and I think one of the things that is an important thing to note and why you should probably stay away from those sexier companies on the forefront right now is if you look at what has happened with private equity firms. I don't know if you've paid attention to this, but because of the cost of capital and the cost of refinancing right now with private equity firms, when they get into a situation where they can't continue to, service the debt that they took on to do these leverage buyouts of these companies, rather than work with creditors to get, additional loans or whatever, they've just been abandoning it and giving it to the banks. They're literally just abandoning companies that they've purchased in leverage buyouts. So I think that's indicative of where we are in the credit cycle and how difficult it is going to become for some of these companies, these new ideas to get financing.
Yeah, because they're understanding that, hey, they overpaid dramatically and it's not worth fighting. I rather just defaults and give it back to the creditors and move on. And so it just shows you how many of those private companies were valued at just egregious valuations. So I think that was a good overview of the technology space here today. And obviously it's going to evolve over time. And if you want to follow along with that evolution, just head over to investtalk.com and subscribe to our podcast.